Hello and welcome to BQ Prime. You're watching Earnings with BQ, and my guest today is from KFin Technologies, Sreekanth Nadella, MD and CEO of the company. Sreekanth, thank you very much for joining us on BQ Prime. Let me begin with the quarter. Good set of numbers, growth coming in YOY and quarter on quarter. What's giving a push to this kind of growth?
Very good afternoon, Sajeet, and thanks for having me over. We just concluded our Q2 with a total operating revenue growing by about 16%, income growing by about 18%, EBITDA grew about 32.5%, and PAT numbers close to 30%. Happy with the results, satisfied. As always, of course, there is more room for to grow. What has contributed to our growth is our focus on diversification. Our core businesses of managing the operations for mutual fund companies and as a share transfer agent continue to grow strong. But also the focus on a diversified set of businesses, which is to drive international business and the emerging asset classes such as alternate investment funds and PMS and pure technology solutions has been helping us to grow much faster. The businesses which are not the mature ones have grown near about 48% as against the 16% plus of our largest share of business. So clearly a factor of 3. And that's what's helping us to exceed the industry growth and have business performance which is in line with our expectations.
Are you seeing a trend, especially with respect to MF, RTA and MF AMC business, which you have, managing fund management business, which is now stabilizing in a nominal growth rate going forward?
We believe that the mutual funds business too has not come to any sort of maturity, if I may. Today, every indicator that you look at points to the fact that this is just the beginning. Our mutual funds overall AUM, if you see at an industry level, has grown from about 40 trillion to 47 trillion in a matter of 6 to 7 months. That's a stupendous growth. And the estimation from the reporting of Crystal and Amphi is that we will touch 100 trillion rupees worth of assets by 28, which effectively translates to 2.5 times increase in the overall assets during this period. And even at that level, we would have hit only about 6 to 7% of our GDP, whereas for a good metric, in many economies is the factor of AUM to GDP. If you look at US, it is 3 times that of the GDP. In many of the developing countries too, it is up north of 60 to 70%. So I like to believe there is a significant room for the industry to grow, and as the industry grows, as a proxy to the industry growth, entities such as us, who are licensed intermediary, we will continue to grow along with our clients.
Will there be any kind of pressure that can come in from the mutual fund industry with respect to costs? Because the SEBI has been looking at the TER for the mutual fund industry. They expect to come out with the second draft, basically based on the recommendations there, which would try to bring in some economies of scale for the mutual fund industry and the growth of TER or imposition of TER. And will that have any kind of impact on you going forward?
Thank you, Sajeet. So this is not a new phenomenon, right? I mean, every 4 to 5 years, you would see there is a downward revision of expense ratios. It happened once in 2019. And if you saw our track record of growth from 2019 to 2023, we have grown much faster than what we have grown even prior to that. This is a natural business, factoring that we ought to do. A certain amount of yield compression is bound to happen as the volumes increase. This is a volume business, as one would expect in a nation like us. And to that extent, passing back the efficiencies in the form of, end of the day, the investors stand to pay, as well as the asset management company. So there can be some amount of yield compression, which is there every single year, through this business. So nothing out of the ordinary I anticipate from this.
And so there might be some impact on the EBITDA margins part of it if there's an yield compression coming in.
Yeah, that's what I'm saying, Sajeet. So there is a certain amount of yield compression that happens nearly every year, right? As the AMC's assets grow, our commercial model necessarily includes certain amount of telescoping pricing, which means the yield we derive for the incremental assets will be lesser than the yield that you derive from the existing base of assets. So to that extent, our growth is in spite and despite of the yield compression that's been happening. So what I'm stating is that the change in further expense ratios may not have any material impact as compared to what we've been having over years.
You've been
And
get
it's our growth.
you've been winning some good clients in the pension space, LIC and SBI. When do you see those coming up in terms of an impact, giving you some comfort with respect to yields coming in from there? Have the operations begun for them?
Thank you. One small correction. It is LIC PFM mandate we
Yeah,
won.
yeah.
SBI was the mandate on the share transfer agency as a RTA.
Yeah, RTA,
we
yeah,
won.
sorry.
These contracts are live immediately. So we expect to see the impact of financials to kick in into the coming quarter for both of them, commensurate to the revenue that we could book for that particular quarter. So not just these two, of course, we've had several wins in the international space. Very excited about our maiden win in Thailand, where we won the mandate of the fourth largest asset management company in Thailand. And we are in conversations with at least 15 more asset managers internationally. And should some of them fructify in the near future, it will have hopefully a positive impact on our further up growth from here.
What about Canada? I mean, how is that business coming up?
So Canada, we have been rendering shadow accounting solutions for a few funds, and we have gone live in the month of February, March, around that time frame in the beginning of the year. So we have improved, our overall platform to meet the requirements of several more fund managers in that part of the country. We are yet to add more clientele at this point in time. And we are obviously building the pipeline to add more clientele. So obviously the successful go live of the current client and the feedback was going to be critical, which we believe we have at this point in time. In time to come, we should see a lot more wins on the western part of the world as against largely an eastern, a landscape that we have today across the nations of Malaysia, Philippines, Hong Kong, Singapore, and Thailand.
How do you plan to bring up or scale up this fund administration part of it? Because you have entered into it in a big way. What kind of opportunities does bring in? And because fund administration also gets you the same or better margin, how do you plan to scale it up over the next year or two?
Thanks, Sajeet. Very, very, interested to be in that space, and that was the reason why we acquired the company called Hexagram in 2021. As an RTA, you largely manage the investor side of it, which is the liability side of any asset manager. But of course, the operations of an asset manager includes predominantly the asset side of it, which is your investment management operations and the accounting aspects of it all. With the acquisition of Hexagram, we have since then become the only QRTA and an RTA at scale who can render both transfer agency and fund accounting services with a complete overlay of technology and the digital stack on top of it. This gives us the unique opportunity to grow internationally, especially when you move into the asset classes such as alternatives. It is very, very critical for a fund manager to look at one entity who can provide end-to-end services. And that truly is the model of many global fund administrators, who've been in this space. We believe this business is large addressable market, with about close to 10 to $15 billion worth of revenue, and no Indian player being there at that space at this moment in time. Our intention and our ambition and our strategic direction and the work we've been doing over the past 5 years is to get into that space, and hence creating the capabilities for fund accounting and administration is extremely important. Today, we manage a little over 15% of the alternate investment funds in the country on our proprietary fund accounting administration. 70% of the pension fund managers use our platform. 60% plus of insurance companies use our platform. Several large mutual fund asset managers also use Empower platform of fund accounting administration. 3 of which are KFin's own clients, and 3 of them are my competitors' clients. So it's a scenario that helps us to not just improve the yield, but also more importantly, provide end-to-end services and solutions to a client under the construct of everything as a service, which is our proprietary ways of working, and we call it XaaS.
Give me a sense of, is it way to scale up this entire fund administration service by bringing more consultancy, tax consultancy or other services on top of it, and get a much more better spread or a margin here?
Very important question again. So, yes, as I said, transfer agency does your liabilities, and accounting and administration does your asset side. But as a fund manager, there are several other aspects of operations you need to look into, right? I mean, tax is one such thing. Legal advisory is the second thing. Compliance vis-a-vis your local regulators could be another thing. Working with analysts and research reports to provide your fact sheets, what have you. So there is a plethora of other work that needs to be brought into the service, and a true global fund administrator, renders many of the other services and not just transfer agency and fund accounting too. Gift City offers us a phenomenal opportunity to build those capabilities, which is what we are doing at this moment in time. As many a global fund is re-domiciling into India, they are finding a definitive gap in terms of how they were being serviced, say if you were to be based in Mauritius or Hong Kong, versus how you're being currently serviced. And that's largely a factor of many an administrator not having the capability or haven't built the capability because that wasn't the model in India all along. So a big yes in terms of building those capabilities are extremely crucial and critical for us to not just provide services outside of India, just as importantly within India in Gift City, and then eventually extrapolating them into the domestic funds as well.
And I guess that you're investing heavily in the Gift City part of it so that you can bring that services across to all funds who are coming into India, right?
Absolutely, Sajid. So we manage about 60% of all the Gift City funds today, and given we also have a significant international business, Gift City allows us to render the operations of those international clients out of Gift City as ancillary services. So we are working on the licensing part of it with the regulators as we get it. We believe in time to come we will have a very strong presence of KFin Tech in Gift City, with plans to add anywhere between 700 to 1,000 people in Gift City, to service both the Gift City clients as well as international clients.
Sreekanth, give me a sense of the investor breadth within the Indian market. You get access to all the investors, right? Whether it's mutual funds, whether it's equities or shareholders of companies. Are we seeing a gradual increase in that kind of investor base as such? Because from a market point of view, we are seeing that, okay, in the cash market, we are seeing a decline of active clients. Mutual funds, the portfolios are increasing, but are we seeing active, clients getting added to that segment? Can you give us a perspective of what's happening there?
Absolutely. I believe there has been a continued expansion of investor interest to invest in financial asset classes. The data points clearly to that angle. For example, if you see the demat accounts, which is one of the leading indicators in terms of financialization and the expansion of retail investors, we have seen an increase of 26% year on year in terms of the number of demat accounts that have opened up new. If you see mutual funds, both in terms of the number of folios, which have seen a 23% increase, as well as the unique investor account, which has now surpassed 3 crores odd number, basically points to a significant interest amongst the retail investors to partake in India's growth story, coming in the form of capital markets. There has been a significant growth in the investor count, even for alternate investment funds and pensions too, if I may. So all across, I see a substantive interest, maybe more in equity markets and probably a little decline interest in money market, and the bond market side of things. But again, that's a cyclicality, and then I like to believe that there would be expansion even in that market as investors understand the market in terms of fixed income. I'd like to believe there is still a significant gap in understanding of a retail investor in terms of money market, and ergo, if you see the gap in terms of number of investors who invest in money market versus not, is significantly high. And another factor, if you take a look at it, is people who invest up to 1 crore, predominantly enter equity markets. But investors with an AUM of greater than 2 crores plus, you would see at least a 20% of the allocation going to money market. So in some sense, that also explains, I guess, the importance of the portfolio diversification. and how a more nuanced investor would look to enter into the bond and the fixed money market as against just pure equities.
And its alternatives getting really good interest from high HNIs or ultra high HNIs.
Oh yeah, I mean without a doubt. I mean in the overall AIF market, I'm talking about now 2013, 10 years back, Sajeet, was 831 crores. Yeah, today you're talking about 3 trillion, right? So that's the kind of increase that you've seen. A CAGR of over 55% over the past 4 years in terms of the assets under management has increased. Only in this quarter, Q2, there hasn't been a substantial growth. I think it has seen only the capital inflows of only about 1.3% increase, which is definitely tepid compared to that of the mutual funds or pensions for that matter. And I probably think that's, I would probably attribute that more to do with the interest rates in the US and the inflationary trends. And some of the capital commitments that have been made, have not necessarily been honored in some cases, or the deployment process too had been a little slow. I think in the context of a significant increase in the small and mid cap sectors, and especially the Cat 3 funds have a pretty large exposure to this particular segment of funds, and that probably would have contributed to a little lesser growth in Q2 for alternatives. But by and large, expansion of the number of funds has increased in the last 24 months. 500 plus new AIFs have registered themselves with the regulator. Many of them have gone live. AUM has gone up. A significant number of retail investors have come into the alternatives.
Mm-hmm. Sreekanth, it was a pleasure talking to you. Thank you very much for joining us today on BQ Prime.
Always a pleasure. Thank you so
Thank
much,
you.
Sajeet.